to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Jeffrey Hare. Jeffrey is an attorney here in San Jose. He provides client-focused, outcome-oriented legal services to his clients. He is also a licensed real estate broker and real estate investor. Jeffrey specializes in real estate law, real estate property transactions, entity formation, commercial leases, loan documents, land use law, zoning, and land use changes, municipal law, and mediation services. So thank you for joining us today. Well, anyway, he's familiar with issues involved in using self-directed IRAs for real estate investments, including setting up limited liability companies or LLCs for real estate operations inside of an IRA. And that's what we're going to be talking about today, is using a checkbook LLC to invest IRA and Roth funds. So Jeff, thank you for joining me today. So before I get started, I'm going to give you a caution, as I usually do, and that is that we're discussing issues in a very complex area. And so this is intended to be just a starting point for a bigger discussion, and we want you to get qualified legal and tax advice. So please do that. Okay, Jeffrey, let's get started with some of our questions. So first of all, just what is a checkbook LLC?
Well, let's start with that. Checkbook LLC is a term that came about fairly recently. It's the ability that allows you to take your IRA funds and invest them into a limited liability company, which is what LLC stands for. Mm-hmm. And then to use that LLC to do the very similar type of investments that you would be doing with your IRA, such as buying real estate, loaning money, making private loans, or doing other things that are considered to be alternative investment strategies that you can use your individual retirement account for.
Okay, good. So what is a self-directed IRA or Roth account?
Well, the federal government a few years ago, back actually in 1974, started to allow people to invest their money in a wide range of alternative investments, including you can invest in metal and gold and property, make loans, do a number of things outside of the normal course of stocks and bonds. Mm-hmm. And the ability to do this was given the phrase self-directed IRA, where mm-hmm. you as the owner of that IRA could invest this in other things other than stocks and bonds. This was to bolster your retirement income and allow you to get a better return perhaps than you might get in the stock market. Mm-hmm. And the term self-directed IRA became about. Now, a lot of times if you work for a company and you have a 401k plan or an IRA, they will use the term self-directed, meaning you get to pick which of their stocks and bonds to invest in, yes. And they've called that self-directed. The true form that I'm talking about is where you move your funds into a custodian or an administrator that lets you invest entirely in investments of your own choosing.
Yeah, a more wide range beyond, again, usually it's a menu that they give you, and here you can go outside of the menu.
That's right. Okay. There are certain restrictions we'll talk about a little bit later, but it is incredibly open. In fact, the only three things you cannot invest in with a self-directed IRA as a general rule are insurance and S corporations, and you also cannot invest in what they call collectibles.
Okay. Is this type of IRA available at most conventional places, like just going to a bank or a brokerage company?
No, most of your traditional big, your recognizable names like Fidelity and A.G. Edwards and some of these others, they're not set up to manage the complexities of some of the things like a real estate investment. So they would prefer not to do that. In fact, they usually, if they allow it, they usually subcontract this service out with specialists in the field. And there are a few. There's a handful of about 10 to 15 companies around the country that allow you to use the self-directed IRA in the alternative investment area.
Okay. So what are the features of an LLC, a limited liability company, that makes it attractive as an operating structure inside of an IRA or a Roth?
Well, the first of all is, as you've recently had somebody on who was talking about the advantages of having a limited liability company. Let's talk about that first, and then it'll explain. Mm-hmm. A limited liability company in California and in many other states allows you to have what they call a single member LLC, which means that you as the investor can be the only person managing and running an LLC. This allows you to have the advantages of the liability protection of a corporation with the tax advantages of a partnership rolled into one entity called the LLC. So the LLC is a very common and very popular vehicle now for real estate investments. If you set that up and then you put your IRA funds into the LLC, your IRA technically owns the company and it allows you to manage it, or you can hire someone else to be the manager. That way, though, you have the ability to direct the investments without going through some of the paperwork that's required if your funds are being held by a custodian or in an administrator. So, for example, let's say you wanted to purchase real estate at a foreclosure sale at the courthouse steps. Those who have done it will tell you that you have to have the money right now ready to go. And you get that great deal, that deal of a lifetime to get that great house at a foreclosure sale. But the problem is you then have to contact your IRA administrator to say, can you have a check here by 4 o'clock this afternoon? They usually cannot do that. Even the best ones can't. So if you had an LLC, you can simply have that check ready to go, move quickly, and do so very efficiently, and that's one of the primary advantages.
Okay. So how is a limited liability company that's inside of like an IRA account different from an ordinary LLC?
Well, it's sort of the reverse. The IRA is sort of inside the LLC. The IRA owns the LLC.
Yeah.
Normally, an LLC that you would set up for yourself, as you and let's say a couple of friends would get together and you would each have a part ownership of a limited liability company, and you pool your money and you go out and make investments, and then you distribute your income to the different individuals. With the LLC, you can put your IRA money, and it either owns part or all of the LLC, and it's sort of set up in that way so that you can then use what the popular phrase checkbook. In other words, you open a checking account.
Yes.
And then as the manager of the LLC, whether it's you or someone you hire or designate, that manager then can cut the checks and can process the funds and handle the transactions. So if you buy a rental property, let's say, as the tenants pay rent, the income comes back to the LLC, and if you have to replace the water heater, you can cut a check to pay for the repairs, and then the money goes into and out of the LLC. But all that while, it stays protected with the tax advantages of your individual retirement account.
Okay. Why is real estate appealing as an IRA or Roth investment right now?
Well, I think the great prices. As we know, the headline this morning is that prices again have dropped. We may be seeing this famous double dip in the real estate market. But prices are right now, for many reasons, are at an all-time low. But the banks are still not too happy to loan money. So using your IRA is a nice source of capital. The stock market returns haven't been doing very well over the last couple of years. They've started to rebound a bit. So there's still some thinking for the long-term hold. For the person who wants to buy and hold some property for a while, you can use your IRA money to buy some real estate and get some positive cash flow.
Okay. So, very good. Okay. How does the LLC operate?
The LLC operates in a fairly much as a separate entity, and it's really important that your viewers understand this. The LLC is a business. I caution people many times to treat the LLC as a business, not as a hobby. When you set up an LLC, it's just like setting up any other type of a business structure. You have to have an operating agreement, you have to file with the Secretary of State, and you have to meet the requirements to pay the annual taxes, the $800 fee in California. There's an annual fee that's required, that $800 no matter what, plus the gross receipts tax that you have to pay. In addition to that, you have every 2 years you have to file a statement of information, and it's only $20, but if you fail to file it, it could be a $250 fine.
Yeah.
And worse, it could cause you to be suspended by the Secretary of State's office for for not filing that information statement every 2 years. So you have to pay attention and run it like a business, set up the accounts, and make sure that everything else is in place. How does it operate? The manager basically has the checkbook and his ability to write, pay the bills, and at the end of each year, you would be required to at least make an accounting available. The beauty of it is if you're using your IRA, there's no federal tax because a single member LLC is treated as a disregarded entity for federal tax purposes. So you do not have to file a federal return, but you do have to file with the Secretary of State in California.
And there's a California form also that you file with the Franchise Tax Board. It's Form 568.
568, that's correct.
So it's like a partnership type form, but anyways, it's a form specifically for LLCs. And again, as we said, the LLC still is subject to this gross receipts tax, also known as the fee. Anyway, some people think that since it's inside of an IRA, it can't be subject to any taxes, and that's not necessarily
true. That's
the
right.
case. Okay. So can the LLC have any other owners other than the IRA or the Roth?
Yes, you can. One of the other advantages of having the IRA in the LLC is the LLC can be used to combine, let's say, a husband and wife each want to invest together, and they each have their own separate 401ks. They could each roll them over into a self-directed IRA, and they have them two separate accounts. They can combine them into a single LLC. You can combine 2 or 3 family members' IRAs, and you can combine IRA money and non-IRA money together. Here's the danger, though. The caution is, yes, you can, but you must maintain the percentage ownerships exactly as you set them up. There's some extra rules you have to follow, but it is still it gives you the ability to combine the resources to make some investments.
Yeah. So you have to be very careful with this. There's a whole area called prohibited transactions.
That's right.
And so, so this is very sensitive stuff that we're talking about, and so you need to work, with your attorney and CPA to make sure that you don't stub your toe, because actually you could disqualify the IRA.
Yeah, and if you want, I can briefly review those,
you could talk about
prohibitions.
Go ahead.
Sure. The primary prohibition, of course, is it's against self-dealing. You, as an individual, cannot derive any personal benefit, directly or indirectly, from your IRA. So you cannot pay yourself.
Yeah.
You cannot.
So you're not going to be pulling a salary probably out of this
That's right.
LLC.
Some people think, oh, I'm going to do a real estate deal, and because I'm a broker, I can take a commission. No, you cannot do that. You also cannot buy your own business. You cannot buy a house to live in, for example.
Yes, yeah.
That prohibition extends to the lineal and the ascendant and descendant family members. So you cannot also buy, your mother, buy her that nice dream house with your IRA, or can you buy your kid a condominium to live in while he's going to college? Those are prohibited transactions. And you have to review those fairly carefully, because you want to make sure that you do not do anything that will cause you to lose the tax advantages of the IRA.
Right.